Hello students, how are you? This is the teacher Haris Bhatt. I am back again to see you people along with me. So today you are seeing my YouTube channel, Learn Accounting with Sir Haris, and today I have come with something very special for you, which you have been requesting since the last around 10 to 15, 10 days almost. So today we are going to solve paper 1, which happened basically on in November, start of November. So we are going to solve 9706 AS Accounting, paper 1, variant 1-2. So we are going to solve 9706 MCQs paper, variant 1-2, October-November 2024. October-November 2024, A-level accounting, paper 1, 9706, variant 1-2. Let's start doing this paper. And inshallah ta'ala, hopefully, I'll be able to solve it in front of you within the stipulated time. I have my calculator with me, and let's do it. The MCQs number 1, let's see. 1 hour paper was there, and you have to solve 30 MCQs in this particular paper. A business sells computer. When it values its inventory, it excludes the value of the inventory that is more than 1 year old. This is because it may be obsolete. Which accounting principle does this demonstrate? So you will know that prudence concept says that future losses should be recorded before its occurrence. So as a business, we start believing that the inventory which we are going to exclude, that inventory has become obsolete now. So it means that we are not able to sell that inventory in the future because it might has become obsolete. So prudence concept says that if future losses should be recorded before its occurrence. So it is going to be a future loss because whenever we are going to sell it out, we will not be able to get anything out of it because it may be obsolete. So we are not very sure, but we believe that it might become obsolete it might have become obsolete right now. So in the future, it will be of no use for us. So which accounting principle does this demonstrate? Going concern? No. Historical cost concept says that non-current assets are always recorded at its original cost price. That is also not the question. Going concern say that business will continue to operate and it will not close down. Prudence is the answer, that future losses should be recorded and assets and profit should not be overstated and liabilities and losses should not be understated. So believe that it is a loss, believing it, that the inventory has been lost because it has become obsolete. If we will record it, we will not, exclude it from the inventory, our assets will be overstated also. So realization concept says that when the goods are sold and it has been passed to the buyer, we will record sales. When the goods are purchased and it has received from supplier, we will record purchases, either the cash is paid or not, or cash is received or not. I have just gone through the all these concepts with you, but the answer is prudence. I hope you understood the point. Let's do the MCQs number 2. A purchase ledger clerk has to use a password to access the ledger in a computerized accounting system. Clerk who used to prepare purchase ledger, he is using a password to access the ledger in a computerized accounting system. Means that he has basically inculcated a password himself in the system. What is the purpose of the password? To limit access to the purchase ledgers by others, so that other people does not have the access to the computer, so that they don't have the access to the purchase ledger. So that's why he has put a password to the computerized accounting system, so that other people should not have access to the computer or should not have access to the data. Number 2, to prevent the clerk accidentally deleting a supplier's account, how can he prevent himself? By putting a password. To stop the clerk recording a fraudulent or unauthorized invoice, obviously again, he himself is the clerk. A purchase ledger clerk has to use a password to access the ledger in a computerized accounting system because he has put that password to get his access to the purchase ledger because he doesn't want others to get the access. So B is the answer. Peter is a credit customer of John. He settles his account of 200. He pays a check and receives a cash discount of 5%. So Peter is a credit customer of John. Which entries are made in the John's books of account to record this transaction? So in this case, we are John, we are not Peter. So Peter is a credit customer of John. It means for John, Peter is basically his customer, his trade receivable. So trade receivable are those people to whom the goods are sold and they used to pay us. So Peter is going to pay us by check and receive the cash discount of 5%. So bank is going to be debited by 190. Discount allowed is going to be debited by 10 and Peter is going to be credited by 200. So answer is A, not C. Answer is A. How come, sir? Because he settled his account by check. Who? Peter. And Peter is going to make the payment to us. So bank is going to be debited by asset. Bank is an asset. Increase in asset debit. 200 into 5% is 10. So discount allowed is an expense. Expense always debit. And Peter is going to be credited by 200 because decrease in trade receivable, decrease in asset is going to be credited. Okay. So A is the answer. Let's move forward to the other part of the question. That is going to be the fourth one. So which item is a capital income? Which item is a capital income? So let's do that. Bank interest received, proceed from sale of business premises, rental income from property, sale of inventory to a customer. Sale of inventory is a revenue receipt. Rental income from property is a revenue receipt. Proceed from sale of business premises, that is going to be a capital income or capital receipt because amount received by the sale of a non-current asset is a capital receipt. So proceed from sale of business premises is a capital receipt. Bank interest received is also a revenue receipt because all these items comes in the statement of profit and loss. So B is the answer. Next, the draft profit for the year of a business is 53,000. Yes, third four will do. Next, the draft profit for the year of a business is 53,000. During the year, the business acquired new premises and include the following cost in the cost of the premises. Legal fee 1,500, insurance 4,500. Legal fee is supposed to be paid, which includes the acquiring cost actually. So that should not be part of the cost. The business does not charge any depreciation on premises. What is the revised profit? So he is requiring us to go for the revised profit. So during the year, the business acquired new premises and included the following costs in the cost of the premises, right? So legal fee, which we have paid in connection with the acquiring of a new premises, is a capital expenditure. It's a part of the premises. It's a part of non-current asset. Insurance is not a part of, it is an expense because we have to pay it. It's not a one-time expenditure. We have to pay it all together again and again and again. It is treated as an expense. So 53,000 minus 4,500, the answer is going to be 48,500. 53,000 minus 4,500, which is the expense actually. The answer is 48,500. B is the answer of the fifth point. Next, non-current assets can be depreciated using a number of methods. How is the most appropriate method decided? How we decide the most appropriate method? The method chosen improves the profit for the year of the business? No, there's nothing to do with the profit. The method chosen is easily understood by the users of financial information. It's not compulsory. Either it is straight line or reducing balance method or revaluation. The method chosen is easy to calculate. It's not necessary. The method chosen reflects the pattern of use of the non-current asset. So the method basically chosen reflects the pattern of use of the non-current asset. If a non-current asset is going to be decrease its value at a constant rate or gradually, we use straight line method. And if an asset is going to decrease its value more in early years and less in later years, like technological assets, the pattern of use of non-current asset, we use diminishing balance method. So the method chosen reflects the pattern of use of the non-current asset. The non-current asset can be depreciated using a number of methods. According to the method which is chosen, should be reflect the pattern of use of the non-current asset. Because we know that purpose of depreciation is to spread the cost over its useful life. 7. Rayan purchased a van for 16,000 on 31st December 2021. It is the policy to apply 25% per annum by reducing balance method for each part of the year the asset is held. So it means that it is month-to-month basis because the asset is being used for each proportion of the year. Rayan traded the van on 1st July for a 6150 reduction on the cost of a new van. So in the cost of the new van, we have been given concession. We have been given a trade-in allowance ठीक है, because we are replacing the old van for a price of 6150. What was the profit or loss made on the disposal of the van? So let's discuss about this. Ryan purchased a van for 16,000 on 31st December 2021. It has his policy to apply 25% depreciation by reducing balance method for each part of the year. Ryan traded the van in on 1st July 2024 for a 6150 reduction on the cost of a new van. It means that 6150 has been given as a trade-in allowance in the cost of the new van. It means that the old van has been sold out for 6150. This is the amount which we are not supposed to pay from the price of the new non-current asset. So it means that the old asset has been sold or traded in for a price of 6150. So how much depreciation we need to charge? 16,000 of that van, which has been sold for 6150, has been purchased on 31st December 2021. It means that we have used that van, right, from in 2022 whole year, then in 2023 whole year, and then 2024 till 30th June. So let's calculate it. 16,000 into 25% is going to be 4,000. That's how my student has calculated 4,000. Thank you very much. I don't remember the name. Afaq, for providing me the paper. He basically belongs to Africa in Mauritius, and he sent me the paper. I'm thankful to you. I'm thankful to all my students who basically are abroad. Your love, your affection, and your motivation basically gives me more and more trust and ignite me, right, to do something good for you in the future also. And I hope that I will pursue with the same determination to help you out in the A-level and O-level exams in the future also. Thank you. 16,000 multiplied by 25% is 4,000. Then 16,000 minus 4,000 becomes 12,000. And 12,000 into 25% becomes 3,000. And again, 12,000 minus 3,000 is going to be how much? 9,000. And 9,000 into 25% multiplied by 6/12. So that is 1125. So the total depreciation on the asset sold is 8125. So what is the book value? Let's calculate it. We can calculate the book value. 16,000 minus 8125, which is the total depreciation on the asset which has been given in part exchange. So 16,000 minus 8125. Let me calculate it for you. That is 7875. And now we have basically that asset has been traded in for a price of 6150 minus 6150. So 1725 is going to be the loss. So B is the answer. That's the correct one. 1725 is going to be the loss on this asset, right? So let's move forward for the other MCQs. I hope so that you have understood this in a very clear manner, and we'll move forward to the next MCQs to solve this. So let's see. Totals of the trial balance of a business did not agree. Totals of the trial balance of a business did not agree. The following errors were discovered. The wages account had been overcast by 550. The sales account has been undercast by 400. A credit sale of 150 has been recorded on the sales invoice as 510. After the appropriate correction were made, the trial balance totals agreed. What was the difference between the trial balance totals before the correction was made? So basically, he is asking us that what was the balance in the suspense account? He is asking us to find the difference in trial balance at the start before the correction. So it's very simple. Just prepare the suspense account and you will find the difference easily. Just prepare the suspense account as you do normally, after passing the rectifying entries, and you will find the balance of the suspense account. So let's calculate it. I'll do it for you in a very simple manner. First entry is wages account had been overcast by 500. So if you will correct this error, wages is basically an expense, it is debited. So wages is going to be credited because it is overcast. We have written it more than the actual amount. Wages credit and suspense debit. So suspense is going to be debited by 550 because of wages. Then Sales account has been undercast by 400. Sales is always having a credit balance. We have undercast it. So suspense debit and sales credit. So suspense is going to be debited by 400 because of sales, right? Then a credit sale of 150 had been recorded on the sales invoice as 510. This is a double-sided error, two-sided error. We have to pass the entry trade receivable to sales with 150 and we have passed the entry trade receivable to sales with 510. It's a transposition error. It does not affect the trial balance. So the difference in trial balance, you can write here, it is going to be 950 credit. So 950 credit debit is not written, but 950 D is going to be the answer for this question. Let's move forward. I think I need to rub it up now. You can see the lecture again. In the books of a trader, discount received of 1400 has been posted correctly in the supplier's account, but debited to discount allowed account. Very simple. Discount received have been debited to discount allowed account, right? We have to credit discount received, but instead of crediting discount received, we have debited discount allowed account. So what we'll do now, discount allowed is wrongly debited. We will give it a credit. Discount received is not recorded on the credit side yet. We will record discount received, and on the debit side, we are going to record the suspense account, right? So discount allowed credit 1400, discount received credit 1400, and suspense debit 2800. So A is the answer, and that is the correct answer for this question. Hopefully you understood, because discount received is having a credit balance of 1400. We have debited discount allowed. Now discount allowed is wrongly debited. It needs to be credited. Discount received is going to be recorded on the credit side where it should have been written. Suspense is going to be debited with the double amount, or whatever be on the credit side, we will debit the total. What are the advantages of preparing a bank reconciliation statement? To eliminate the risk of fraud in banking transactions, all risk and frauds are not going to be rectified or eradicated by the BR, bank reconciliation statement. It just reconcile the difference between cash book and bank statement. To helps to identify error in bank statement, that's right. It helps to identify out-of-date checks. That is also true. Out-of-date checks means which is not yet cleared or not presented. So 2 and 3 is going to be the answer. So D is the answer for the MCQs number 10. Okay. So let's move forward. Here is the 8th one. The totals of the trial balance of a business did not agree. Okay, we have already done that. Okay. So the cash book of a business showed a debit balance of 3900. The difference from the bank statement balance, the bank statement include bank charges of 250 and a direct debit of 3280 and a credit transfer of 300. None of these amounts have been entered in the cash book. A payment of 620 entered in the cash book had not yet been presented for payment. What was the balance on the updated cash book? So always remember that updated cash book needs only the correction of those things which are recorded in the bank statement but not recorded in the cash book. They include receipts and payments. So the last point, a payment of 620 entered in the cash book had not been presented for payment. They are unpresented checks. They are not presented checks. They are supposed to be recorded. They are supposed to be corrected in the bank statement. They are supposed to be corrected in the bank reconciliation statement. We need the updated balance of the cash book. So it includes receipts and payments. So debit bank column, debit bank balance is 3900, right? Bank statement include bank charges and a direct debit. These two things are payments. It needs to be subtracted. And a credit transfer of 300, that is going to be a receipt, which will be debited. Let me prepare it for you. No issue. We'll do that. Like here, I will write the brought down. That is going to be 3900. Then credit transfer, which is the receipt, is going to come on the debit side, 300. And then bank charges, 250 will come on the credit side. And again, direct debit, bank has debited the bank statement and it is not yet credited in the cash book. That is also come. Dishonored check will also come, obviously. And then I will go for the total of the debit side and I will find the carried down. Let me calculate it. 3900 plus 300, 4200 minus 250 minus 3280, 670 is the answer. So B is going to be the answer for this question. Okay. Let's move forward. I hope you are getting all the things. Inshallah ta'ala, I'm going to upload the guess of February, March also in the future, hopefully. But I will wait for other teachers to have a blast, okay, and to go for the guess. So I'm ready to take up the challenge. 12. Which items will be entered on the debit side of the purchase ledger control account? Which items will be entered on the debit side of purchase ledger control account? Contra with the sale ledger control account, that's true, because contra entries means that one same person is our customer and our supplier also. So contra entries comes on the credit side of sale ledger control account and debit side of purchase ledger control account with the same amount. Discount received will also come on the debit side. Return inward won't come because it comes in the sales return, sales ledger control account. So PLCA includes what comes on the debit side of PLCA is 1 and 2. So A is going to be the answer. A company prepared a sale ledger control account. The balance did not agree with the total of the sale ledger balance, which were 42650. The following errors or omissions were discovered. What was the corrected total of sale ledger balance? So one thing which is very important to discuss over here, we have been given the sale ledger balance of 42650. So the errors in the control account, if it is given, we are not able to rectify them. Why, sir? Because the control account balance is not given in the question. We have been given sale ledger balances. So we will rectify only those errors which will come in sale ledger balances, and then we can find the corrected balance of sale ledger balance, which should have been the corrected balance of control account also. So an irrecoverable debts of 500 in the journal has not been recorded in the sale ledger. So bad debts entries, bad debts debit and trade receivable credit, and we have not recorded in the sale ledger. So we have not subtracted it from the trade receivables of 42650 minus 500. We will subtract it because in the sale ledger, it is not yet been credited. So subtracted 42150 is the answer. Then sale journal has been incorrectly added and must be reduced by 750. This is the error which has committed in the total of sale journal. That will come in the control account. It will not affect ledger balance. Then sale ledger control account includes the discount received of 400. It should have been discount allowed of 600. Again, it is the error which has committed in the control account. It does not have any impact on the ledger balance. Sales to J. Brown have not been entered in his account. That is okay. Sales to J. Brown means that J. Brown debit and sales credit, but we have not entered in the account of J. Brown. So J. Brown means that trade receivable has not yet been debited. So 640 is going to be again added. So 42650 minus 500, 42150 plus 640 is going to be 42790, right? So D is going to be the answer. 42650 minus 500 and plus 640, 42790, because we have to rectify only ledger balance. So let's see the next thing. Okay. The current asset of a company include the balances, current asset of a company. Remember this, the current assets of a company include the balances on both the rent payable and rent receivable account. What do these balances represent? Current assets of a company, my dear. Rent payable means that this is going to be, rent payable means that it is a prepaid rent, right? So prepaid rent will be recorded. Rent, we have paid the rent in advance. That is why it is prepaid rent. That is why it is shown in the current asset section of the statement of financial position. And rent receivable account is also shown on the current asset. It means that is accrued rent. That is the rent which is yet to be received. Accrued rent, rent owing. So accrued rent. So C is the answer. Prepaid rent and accrued rent received is going to be the answer. So C is going to be our answer. Prepaid expenses and accrued income. Next. The following information is available for a sole trader. Allowance for irrecoverable debt at the start is 1400. Total trade receivable at the end of the year 36,000. It's quite easy actually. At the end of the year, it was decided to write off 1,000 as irrecoverable debt. But that is yet to be written off. It was decided, not yet written off. So 36,000 minus 1,000, which has already become bad debts, irrecoverable debts, 35,000. Parveen is 3%, 35,000 into 3%. If I will calculate, let me calculate it. 36,000 minus 1,000 are the bad debts. 35,000 into 3 divided by 100. It will become 1050, right? So the provision which was already available is 1400 and we need a provision of 1050, right? So what is the entry in the allowance for irrecoverable debt account? That is 350 debit. How come, sir? Let's do it. Man, why not? Why not? See, we need we have already a provision with us with an amount of 1400 and the carried down provision which we require actually that becomes 1050, 35,000 into 3%, that is 1050. So we need to decrease the provision by 350 to make it 1050, right? So provision is going to be decreased by 350. So provision for doubtful debt account, allowance for irrecoverable debt account is going to be debited by 350. Entry will be allowance for irrecoverable debt debit, profit and loss account credit, yeah, statement of profit and loss credit. So this is how we are done with this. Okay, now let's move forward. Okay, a sole trader, just a minute. Let me rub it for you first. Okay. A sole trader statement of profit and loss shows the following information. Opening inventory 5,000, operating expenses 3,000, profit for the year 5,400. Closing inventory is 10% less than the opening inventory. It's very simple. Closing inventory is 10% less than the opening inventory. So opening inventory is 5,000. Closing inventory is 10% less than the opening inventory. 10% of 5,000 is 500. So closing inventory is 5,000 minus 500, that is 4,500. All goods sold are marked up by 50%. So markup is the gross profit percentage on cost of sales. So markup is 50%. What was the purchases for the year? So what is the purchases for the year? We need to find the purchases. So let's do it. That is quite simple to do that, but little bit technical. Profit is given and operating expenses are given. We will add profit and operating expenses to get gross profit. Sir, didn't understand the answer. Let's see. Profit is equal to gross profit minus expenses, obviously. So we can say like that gross profit is equal to profit plus expenses plus operating expenses. Okay, now I can calculate. Profit will be 5,400 plus 3,000. So that is going to be 8,400 is going to be my gross profit. Now it is clearly mentioned that our gross profit on cost of sales is 50%. You can consider that 50% of cost, because markup is a profit percentage on cost. So 50% of cost is equal to gross profit 8,400. No? Okay, let's do it again. Markup is 50%. What is markup? Markup is basically a percentage of gross profit on cost. 50% of cost is equal to 8,400 because gross profit, we have calculated 8,400. So cost is going to be, the cost of sales is going to be 8,400 divided by 0.5. 8,400 divided by 50%, you can say one and the same thing. So answer is going to be 16,800. 16,800 is going to be the cost of sales. Now you can find easily cost of sale is equal to opening inventory plus purchases minus closing inventory, and cost is 16,800 is equal to opening inventory is 5,000 plus purchases we don't know minus closing inventory is 4,500. Now we can easily solve this. That purchases is going to be 16,800 plus 4,500 minus 5,000, that is 16,300. So C is going to be the answer, 16,800 plus 4,500 minus 5,000, right? Not that difficult. Just you have to go for some steps and then it will become very, very easy for you to understand it. Let's move forward. L and M are in partnership, sharing profit and losses in the ratio of 3:2. 3/5 and 2/5. They have the following current account balances. 31st March 2023, L 3,000 credit, 4,500 debit, 14,200 credit, and 6,200 debit. The balance at 31st March, after taking into account the following: interest on drawing, the balances at 31st March, which has been given in the current account L and M, they have been calculated after taking into account the following: interest on drawing, interest on capital, and drawings. What was the residual profit to be shared between L and M for their ended 31st March? So what you do, you will prepare simply, either you will prepare simply the current account. When you will prepare the current account of L and M, you will get the answer for these. Let me do it. I will just make a little bit of it for you, like L and M. And here I will write also L and M. So what we are going to do, that I'm not going to go for the lines. So first of all, the opening 31st March, L was having a current account balance of 3,000 credit. So I'll write here 3,000 credit, right? Then M is going to have a 4,500 debit balance in his current account. Then interest on drawing will reduce both their balances, L and M, 1,000 and 1,500. Interest on capital will come on the credit side, 3,000 for L and 2,000 for M. Then drawings will come on the debit side. That is going to be 10,000 and 15,000. And here we'll go for the profit share. We'll go for the total of this, total of the debit side, and you can get the share of profit. That is 10,000 plus 11 is going to be 1,000, is 11,000. 11,000 minus 6,000 is going to be how much? 5,000. Then this is going to be the 15,000 plus 4,500. Oh, sorry, closing balances are also given. I forgot to write it down. Carried down balances. 31st March 2024, 1,400, 200 credit. Always remember that closing balances, if given in the question, it will always be written on the opposite side. So carried down balances will written over here for L. 14,200 credit means that it will come over here, and 6,200 debit for M will come over here for the carried down. And now you can take the difference and you will find the balancing figure easily. If you want to calculate it, let me write it again for you. That the carried down balances for L is 14,200 and for M it is going to be 6,200 debit. Debit means that it will come on the credit side because closing balances are written on the opposite side. Now I will go for the total. If you want to go for the lines also, I can do that for you for a little bit while. Like here, some portion has not been very clear. It's fine. Now, if I will go for the total of L, the debit side looks heavier. That is 14,200, right? Plus 11,000, that is 25,200 minus 6,000, 19,200. Share of profit is 19,200. For M, that is 15,000 plus 6,000, 21,000 minus 2,000 and minus 6,200, that is 12,800. It's simple. Share of profit for L is 19,200, sorry, and for M is 12,800. Now let's total it up. 12,800, 19,200 plus 12,800, you will get 32,000, right? So you have to prepare the current account actually. So D is the answer. Residual profit to be shared between L and M is going to be 32,000. And then we have shared that 19,200 and 12,800 in 3/5 and 2/5, right? You can do that way. You can prepare the account also properly, but it's not that difficult to understand. Let's move forward for the next part actually. So let's see. A company issued shares at a premium. In which financial statement would the share premium appear? Very easy. Which financial statement would the share premium appear? Statement of changes in equity and statement of financial position. Statement of financial position only, no. It comes also in statement of changes in equity. Statement of profit and loss, it doesn't come. Statement of profit and loss doesn't come. So A is the answer. Next is statement of financial position of a company at 31st December showed the following. Issued share capital are given. 2 lakh ordinary share of 1 each, 2 lakh. On 1st January, made a right issue of 1 ordinary share for every 5 ordinary share held. The share issue price was 1.5 per ordinary share and issue was fully subscribed. On 1st July, made a bonus issue of 1 ordinary share for every 4 ordinary share held at that date. What was the amount of cash received by the company in respect of these transactions? This is a very easy MCQs. Why, sir? Because bonus share does not involve any change in cash. Because bonus share is a capitalization of reserve. We transfer the reserves into share capital. Out of share premium, right? Or retained earnings, revaluation reserve will not be used anymore, right? So 2 will not come. 1 will affect only for the bank. And the number of shares which you are going to launch is 2 lakh. Every 5 shares, we are going to divide it by 5, multiplied by 1. The shares are going to be 40,000 shares, right shares. And 1 share price is 1.5 because 0.5 is the premium. So the amount is going to be how much? That is 60,000. So 60,000 is the amount of cash received by the company in respect of these transactions, rather in respect of only one transaction, which is basically the right shares. 1.5 because that is on premium. That's why we are issuing that on prime. Which ratio measures the efficiency of a business? Asset test liquidity, markup profitability, non-current asset turnover basically tells you the efficiency of the business. That return on capital employed tells you the return on investment. That is also a profitability ratio. So non-current asset turnover ratio will be the answer for this particular question. Next is a company's return on capital employed is 10%, decreased by to 10% in the current year from 15% in the previous year. Let's discuss it again. See, return on capital employed, the formula for return on capital employed will be operating profit, profit from operation, you may like this, over capital employed. Capital employed is going to be the, non-current liability, and capital plus non-current liability, equity plus non-current liability. Now the question is, examiner is asking that capital employed decreased to 10% in the current year from 15% in the previous year. So it means that return on capital employed has gone down. Any ratio can go down if the numerator will decrease, right? Or denominator will increase. The ratio will go down. Any ratio will increase if the numerator will increase and denominator will decrease. Okay? Opposite. Directors have noted the following changes during the current year. A substantial investment in a non-current asset was funded by new debenture. This is an increase in non-current liability, right? So this is the answer. Why? Because the denominator, capital employed, is increasing. When capital employed will increase, the ratio will decrease, right? There was an increase in current liability. It does not affect this return on capital employed. Expenses to revenue ratio increase. When expenses to revenue ratio will increase, there will be more expenses and profit will definitely be decreased. That is also be the answer. Rate of interest on the company is large. Company's large overdraft increased. Rate of interest doesn't matter. Expenses to revenue ratio increase matters. Why, sir? Because when expenses are increasing, it means that the profit is going to decrease. So when the denominator will decrease, the ratio will decrease. And when the denominator will increase, the ratio will still decrease, right? This side, profit will increase, ratio will increase. Capital employed will decrease, ratio will increase, and vice versa. So because of expenses, operating profit will decrease. That's why ratio is going to decrease. Capital employed is increasing. That's why ratio is going to decrease from 15 to 10%. Okay. So 1 and 3 is going to be the answer for this particular question. A sole trader cost of sale is 2,40,000. The gross profit margin is 20%. Margin is a profit percentage on sales, my dear. It is not a profit percentage on cost of sales. You have to change margin into markup. What are the sales for the year? First, you have to change margin into markup. And when you change margin into markup, the formula which we use is percentage over 100 minus percentage. If it is markup into margin, the formula will be percentage over 100 plus percentage. Percentage over 100 minus percentage. You can use unity method or whatever maths equation. It's fine, right? So 20 over 100 minus 20 is going to be 20 over 80. So now that has become the markup, and we can find the gross profit by solving gross profit by multiply the markup with the cost of sales, which is given 2,40,000, 20 over 80. So that is going to be 60,000. And now you will add cost of sales 2,40,000 plus 60,000 gross profit. You will get the amount of sales, that is 3 lakh. Now, if you calculate gross profit margin on sales, that is 3 lakh, to 3 lakh into 20%, you will get again 60,000. So it is proven, but we can't prove it because we don't have sales till now. Now we have sales. Now we can do that. So we have cost of sales has been given. We have to convert margin into markup, and then we have calculated gross profit by multiplying cost of sales to the markup, and then gross profit will be added in cost of sales to find the amount of sales figure. Let's see the next MCQs. Business employs mechanics to make a single type of product. As demand increases, more mechanics are employed. Even every time 8 extra mechanics are employed, 1 extra supervisor is needed. Which option best describes total labor cost? So it's very simple. Every time 8 extra machinists are employed, one extra supervisor is needed. It means that machinists basically cost is variable and the supervisor's cost is stepped cost. Why? Because after every 8 machinists, the supervisory cost is going to have a certain increase, right? Like step. So that is why supervisory cost is a fixed cost, but it is stepped cost. While machinist cost is going to be a variable cost. Why? Because every time 8 extra machinists are going to be employed, so the payment made to the machinist for each particular product is a variable cost. It will increase if they will work more. It will decrease if they will work less. So that is going to be a direct labor, and that is why it is a variable cost. The variable and stepped cost is going to be the answer for this MCQs. Next, the inventory movement of a business in 3 months period are shown. January, 100 units we have purchased for $5. Again in January, 200 units are purchased for $8. February, we have issued 50 units, and March, we have issued 200 units. The business uses the first in, first out method of inventory valuation. What was the value of inventory at the end of March? At the end of March, what is the value of closing inventory? So let's see, it's quite simple. 100 units, 50 units have been issued first. So out of this 100 which were available, 50 has gone. Okay, that's fine. Then 200 units have been issued. Then 50 from this 100, 50 will be a part of issue from this 100, and the remaining 150 will come from 200. So 50 remaining from this 200 multiplied by 6, that is 300 is going to be the answer. So D is going to be the answer for this particular question. Let me explain it for you. 50 units are issued at the rate of 5. That is going to be 250. Sorry, that is going to be 250 from this 100. Again, because now we have to issue in March, again 200 units. So 50 which was previously available, they will be issued at the rate of 5. Again, 250 will go, and the remaining 150, because total units which are going to be issued are 250. Remaining 150 we will take from January, but at the rate of 6. That is going to be 9,000, if I'm not wrong. And the remaining units out of 200, that is going to be 50, which is the closing inventory at the rate of 6. And that will be my 300 is going to be the my inventory, closing inventory for the at the end of March. You can do like that also, like 100 plus 200, 300 total received minus 50 issued and 250 issued. 250 has been issued. Okay. So 50 units are left, and that should be left from the those units which are available at the end. At the end means from the latest stock, from the latest inventory, because all first in, first out, all above units have already been issued to the factory or issued to the customer. Okay. So let's move forward. D is going to be the answer as I discussed with you. A customer plants an order for 20,000 bricks. Which costing method will be supplier used to price the order? That is batch costing. Job order costing means that a customer is going to give you the order according to his choice, and you are going to give customer-based orders, right? Customer-oriented orders will be given. The job has been assigned to produce a good which is according to the requirement of the customer. That is not unit costing is also not over there, because we are not going for per unit cost. We are going to place an order for 20,000 bricks, and that is usually be prepared in batches, like cupcakes, right? Cupcakes and other things, they are used prepared in batches. So batch costing is the answer. Marginal obviously not. That is used for decision making, and it is also known as variable costing or contribution costing. The following budgeted information and actual information is available. Overheads, budgeted actual, labor hours, machine hours. What would be the company's most suitable overhead absorption rate? So always remember that when we used to calculate OAR, overhead absorption rate, I mean, we always use budgeted data, right? So we are going to calculate the budgeted overhead cost divided by budgeted hours. And we are going to take budgeted labor hours. Why? Because we believe that it is a labor intensive business, because labor hours are used more than the machine hours. So we believe that this is a labor intensive business or department. So we are going to use labor hours as a basis to calculate OAR. So the overheads, budgeted overheads are 4,60,000, and budgeted hours, which we take basically labor hours 28,750, we will get the overhead absorption rate, and then it is going to be multiplied by the actual labor hours 21,000, the OAR, to get the absorbed overhead cost, to find the over and under absorption of overheads if need be. But in this question, it is not required. So I'm going to calculate 4,60,000 divided by 28,750. The answer is going to be 16 per labor hour. So A is the answer. That is 16 per labor hour. It's quite easy. I personally believe that this paper of October, November 24, variant 1-2, that was quite easy. It's an easy paper, I believe. One of the easiest paper. The following information is available from the costing records: budgeted overhead cost, budgeted direct labor hours, actual overhead cost, actual direct labor hours. By how much are the overheads over-absorbed or under-absorbed? We have discussed this in the last MCQs, because it just asks us to go for the first portion. Now I will go for the total portion, the total part of the story. So let's do it. The budgeted overhead cost is 32,000, and budgeted hours, OAR, we have to calculate OAR first. How? Budgeted overhead cost divided by budgeted direct labor hours, which is going to be 32,000 divided by 4,000, that is going to be 8 per labor hour. Now, over-under absorption overhead cost requires you to take the difference between actual overheads and the absorbed overhead cost. So actual overhead cost incurred is given 34,000, and absorbed overhead cost we can calculate like actual hours 3,900 into multiplied by OAR, which is 8. Actual hours multiplied by OAR, we will get the absorbed overheads. 3,900 multiplied by 8, 31,200, right? So we can see that absorbed overheads are on the lower side. The difference is going to be 2,800, and that is under absorbed. Yes, we have to think from the point of view of absorbed overheads. Always. If absorbed overheads are more than actual overheads, we are going to call it as over-absorbed. If it is less, then we are going to call it as under-absorbed. Okay. So 2,800 under-absorbed is going to be the answer for this question. It's quite easy. We have been doing that in marginal absorption costing so many times. Which item are included in the calculation of contribution to sales ratio? Very easy. Which items are included in the calculation of contribution to sales ratio? Fixed cost? No, it does not come in contribution. Contribution is sales minus variable cost. You will get contribution. Variable cost, yes. Sales revenue, that is also yes. Sales volume, we don't need sales volume, right? Because either we can calculate it through contribution per unit divided by selling price per unit, or total contribution divided by total sales. Both can happen. So C is going to be the answer. Variable cost and sales revenue will be required, because sales minus variable cost will get contribution, and contribution divided by sales, you will get the contribution to sales ratio. So C is going to be the answer, not D. That boy has done D, but that D is not the answer actually. Let's see the next one. The financial information for selling 6,000 units in August was as follows. 6,000 units we have sold, selling price 40, variable cost 22, fixed cost 12, and profit is 6. The selling price was reduced by 10% in September. Which level of sales are needed in September to achieve the same total profit as August? So let's do it. This is a little bit technical, you can say. Selling price was reduced by 10%. So 40 into 10% is 4. So the selling price is going to be 36 now, because it has been reduced by 4. 40 minus 4, 36. We need to go for the same total profit. So 6,000 units we were selling in the past, and the profit per unit is 6. So we need a profit of 36,000. In any case, even the selling price has decreased, we still need a profit of 36,000. So what level of sales are needed in September to achieve the same total profit as August? Now, we know that total fixed cost does not change with the change in the volume or anything else. So 6,000 into 12, that is going to be 12 into 6,000 into 12, that is 72,000. Right? So profit plus 72,000, if we go reverse, basically, we are going to go for reverse for that, because we know that sales minus variable cost is contribution. So I'm going to go for the contribution. Profit plus profit plus fixed cost. I'm going to have the contribution. This is fixed cost. Let me write it also like here. Okay. So profit plus fixed cost, we will get total contribution. Let me calculate it. 36,000 plus 72,000. It is 1,08,000. So 1,08,000 is the total contribution. Now, if I will divide the total contribution, variable cost is also given. That is going to be 22. And the level of sales are needed in September, basically, to achieve the same total profit in August. So we need a contribution of 1,08,000. And what is the contribution? Because you know that variable cost per unit does not change. So the contribution per unit is going to be 36, because selling price has reduced. 36 minus 22. So what is going to be the contribution per unit? That is 14. So 1,08,000. Let me write it down. Total contribution divided by contribution per unit. Okay. Total contribution divided by contribution per unit. 1,08,000 divided by 14. You will get the answer of units that you need to sell. 7715. So C is going to be the answer. 7715 units you will sell, and then you will get the, it comes as 7714 point something is coming, but we'll take 7715. I repeat again, little bit technical. That's why I'm going to repeat it again for you. And you can see that again also. Problem is this, that selling price was reduced by 10%. So 40 into 10, 4. 40 minus 4, 36 is going to be the selling price now. And examiner wants that you should get the same total profit. Profit is 6,000 units we are selling in the past into 6 profit per unit. 36,000 was the last year profit, was the last month profit. So we need the profit, the same profit of 36,000. And you know that fixed cost does not change. So total fixed cost does not change. 6,000 into 12, that is 72,000. We will add 36,000 profit plus fixed cost. Contribution is 1,08,000. So we need 1,08,000 profit. We need 1,08,000 contribution, where our contribution per unit is now which is selling price does not change and variable cost per unit will not change. 36 minus 22, 14. So 1,08,000 divided by 14. So 7715 is going to be the units which you need to sell if you want to have the same total profit of 36,000. You will get it actually. If you calculate it, you will get the same total profit of 36,000. Okay. So this is how we have solved this question also, which is going to be the 29 question we have done. So which statement correctly describe cost volume profit analysis, CVP analysis? It assumes a linear relationship between cost, revenue, and volume. That's right. It can be used in what if analysis. Yes. It is useful tool in long-term decision making. No, it is for short-term decision making. It shows how cost, revenue, and profit changes in relation to sales volume. That is also true, right? So it is used for short-term decision making. Actually, marginal costing is used for short-term decision making. So that's why it shows how cost, revenue, and profit change in relation to the sales volume. So cost, volume, profit analysis. What is the effect of cost with the change in volume? What is the effect of cost, change in cost, and change in volume on profit? So this is what we basically see. That what is it shows how cost, revenue, and profit change in relation to sales volume. Right? So this is the answer. What if analysis means that if cost is changing, what is the effect on profit? So this is what if analysis. What if cost is changing? That what will happen? It's a linear relationship between cost, revenue, and volume. Obviously, it's a linear relationship because with change in cost, there is a change in revenue, and with change in revenue, there is a with change in volume, there is a change in cost, and there is a change in revenue also. Okay, so this is how we have done that 30th MCQs also. B is the answer. So let's see if I have missed some part of the MCQs. Let me check it. We have done this already. I believe that this is 1, 2, 3. Okay, 4, 5, 6. Then 7 is missing, I believe. Right? Because I was expecting that some part is missing. 11, 12, 13. That is 8, 9, 10. Okay, here. Okay, here it is 7. We have done that also. Okay, we have completed the paper. If you have any problem, you can ask me on my WhatsApp. My WhatsApp is 0333471287. You can send me the message also directly. I am very much open to you, and I will be very happy, especially when my overseas students, the foreign students, they used to approach me. I feel very excited because you are basically the people who have made me realize that I'm doing something good for the community. Because unfortunately, in our country, we don't appreciate others actually. You may say that we are a little bit, hypocrites. Our nation is just like that. But we are improving. We are trying to improve ourselves. But I basically want your support all the time because all overseas students and those students who are living abroad, they have helped me out. They have really motivated me and they have appreciated me all the way through. I'm extremely thankful to you and hoping to see you and hoping to listen your queries in the future also about this paper. And inshallah ta'ala, I will upload more things about it. If you want to ask me or want me to upload something, you can ask me directly also on my WhatsApp number also, Insta, or message me on the message board or on my YouTube channel. I will upload this, inshallah ta'ala. Thank you very much for your time. And do subscribe my channel, Learn Accounting with Sir Haris, right? And follow me on Insta and Facebook also. Thank you very much. Take care. Allah Hafiz. And keep for the February, keep looking for the February, March guests, inshallah ta'ala, soon.